Now, here's what I want to do to get it started, all right? I want to make sure everybody can hear me, and I want to make sure we can talk to each other. So if you don't mind, all right, you've got a chat box, okay, that is part of your web tools. And what I want you to do right in there where it says type message here, can you just do me a favor and let me know where you're listening from? Okay, that's going to let me know a couple of things. Number one, that you know where the chat box is. Number two, that you can type something in there. But whenever you type something, that's going to show up right here on my screen. And I want to know that you know how to use this, because I want to talk to you today, and I want to give you a chance to talk with me. All right, rather than just have it be information coming at you, I want us to have a nice robust discussion here today. Okay, that's what a lot of trading is about, drilling down, all right, getting down to the business of answering questions and being precise so that, you know, your questions can be answered. You have that clarity, because clarity is always going to give you the confidence to do stuff. So go ahead and do that just very quickly. And while you do that, good, a lot of you are logging in with me. Wow, look at this group today. All right, big group number one, but we're kind of a far-flung group. I've got Ontario, Canada, right? I've got California, I've got Jacksonville, I've got Pittsburgh, I've got Phoenix. All right, where else are you listening from? There's the UK. All right, more of you are checking in. Gainesville, Rochester, New York. Gerald, I went to Gates Child High School, so you're probably right down the street from where I grew up. That's pretty cool. All right, same thing, Joe, Michigan, London, Fort Myers. Okay, a bunch of my Floridians, right? What else are you going to do on a Thursday afternoon, right? Instead of preparing for a hurricane, you're going to come to a webinar. I like it. Good for you, right? Damn the hurricanes and full speed ahead. Appreciate that. All right, here's what we need to know. Just before we get started, we got to talk about the fact that we're trading the market. All right, if you don't know what you're doing, you can lose your money. That's what this says right on the screen. Okay, you should never trade with money you can't afford to lose, and you always trade with your equity management in mind. All right, I'll tell you right up front, I'm not a CTA, which stands for Commodities Trading Advisor. So what that means to you is I cannot trade your account for you. Okay, that's where you're going to come in. You're the one that's always going to be in control of this exercise. All right, the goal obviously is we're going to trade for profit. We're going to protect the downside. We're going to look for those good entries and exits. All right, and look to get you in a profitable position. All right, well, that's what we're going to talk about today. All right. And I hope this will be a real good use of your time. We got just a little over an hour to get all this in, and I'm excited. All right, around here, we're real excited because Friday, we're going to launch a new group of traders here, all right, at the Market Traders Institute. All right, now our prior groups that have been using this target trading program, the results have just been awesome. All right, and I'll show you some of those results today so you can really understand the efficacy of this program. But what do you come to see? I mean, you come to see stuff that works, right? Have a game plan put together, right? And a shot at making some serious money, right? That's what we're all looking for. All right, well, with what's been going on, right? And you've been watching it with what's been going on in the pound, right? And the euro, right? Especially with what's going on in the US dollar, okay? On Friday, what we're gonna do here is we're gonna use target trading, all right? And the formula that I'm gonna show you today, and we're gonna host, right, a session for our new traders, Friday morning, 10 o'clock, and we're gonna put everybody that works with our group in a position, right? Instead of just watching things go by, all right, like most people are going to do, we're going to put our team in a position to make between 8,000 and 10,000 pips off of this. All right, now what does that mean? All right, well, if you're a new person, I want you to write this down. That means if you're a trader, okay, and you're trading with our group, trading our recommendations, right, and you're trading just for $1 a pip, that means putting yourself in a position to make between $8,000 and $10,000. So I got to think that's at least worth your time to hear about. And this is how we support our students. All right, we quantify things, right? Then we show them, then we go out and do them. All right, so Friday at 10, right? Go ahead and write that down, because anybody that's here, okay, at Investor Inspiration that wants to be a part of that session, right? Get a direct view of what it means to be a Forex trader with our group. Well, at the end of this, what I'm going to do is I'm going to give everybody an opportunity to do just that. All right. And the key is going to be right here. All right. I'm going to show you how the target trading system, right, is helping our students, right? When, you know, we call them students, but really they're traders. They're people like you that are trading from home, right, from the kitchen table. It's helping them capture consistent wins, okay, in the Forex market. And that's really a word that I want you to write down, all right? Consistency and clarity, right, is going to be the key to your success. Anybody can have a program that works once in a while, okay? But consistency and your ability, all right, to trade through all kinds of markets, that's going to be the key to your success, all right? Being able to do something over and over again. All right, well, this system that I'm going to show you today is going to get you to that consistency very, very quickly. All right, and let me give you an example, just what I mean by quickly. Okay, I want to show you what I did with our last group of traders, all right, that we launched, okay, and traded with over a 90-day period. Okay, I want to show you that this account right here. Okay, this is a real money account, all right, that I opened with my last group of traders that I was working with, most of them brand new to the Forex. And I said, all right, let's all open an account, right, with a small amount of money, right? Let's have a proving ground kind of account, make sure that what we're doing works. And we ended up trading this thing together. Now you can see it right here. I opened this account on April the 16th with a little less than $2 grand, all right, not a lot of capital. Well, what happened here? Okay, the goal of this account was to show everybody, all right, that in a consistent and patterned way, all right, not starting with a lot of money, okay, and regardless of what currency you're trading, in a consistent and patterned way, regardless of this announcement or that presidential election or whatever it was, okay, that you could consistently add wins to the account. All right, now I'm not going to tell anybody that this is a perfect system. You can see that right here. All right, you're a trader. You're going to put in some gains. All right, you're going to take some losses. That's just what trading is all about. All right, but the key here is this: after 2 weeks, okay, this account went from 2,000 to 4,000. All right, it doubled in size, and without taking a whole lot of risk. All right, just using the system that I'm going to show you today. And most of the time, all right, most of the time, if I show somebody an account that doubled in size, all right, people are at least interested in that. They're like, yeah, you might as well show that to me, and I'm gonna. All right, but before I do, all right, I want to show you where this account stood after 90 days. Okay, after 90 days, again, in a consistent and patterned way, not hitting home runs, right? Because we couldn't hit any home runs. We were only working with a couple of $1,000s. You understand that? But take a look at the result. After 90 days, all right, this account went from $2,000 to $12,000. All right, 90 days, you got a $10,000 profit. 90 days, you got a 500% return. There's only so many places you can even talk like that. All right, but this happens to be one of them. And I show you this because this is an example of what happens here with our group. All right, and what I know is this: you came here today, right, for a couple reasons, right? Check this out, kind of see if it's for you, find those nuggets that you can add to your trading endeavors. Well, my job today, right, is not going to be to convince you of anything. All right, I'm just going to convey enough information so that you can make a good decision on whether or not you're going to add the Forex to what it is you're doing. All right, this is not going to be for everybody, and that's okay. All right, but if I do my job right, okay, you're going to have enough information, you're going to have enough clarity, you're going to see enough tools, right? You're going to see enough so that you're going to be able to make a good decision on this. All right, just so you know, I'm coming to you from the Market Traders Institute. I'm here in Orlando, Florida. We've been doing this for 23 years, all right, providing software, providing mentorship, and providing education. All right, and no matter what markets are doing, okay, no matter what might be going on in the world, and there is plenty going on, you've been seeing it, and currencies seem to be the one thing, right, that is the headline driver right now. Mario Draghi did his thing today with the European Central Bank. Boom, euro popped, huge. A lot of money was made today. All right, if you didn't make money on that today, you're missing the boat. Okay, when you got Janet Yellen doing her thing, when you got Bank of Japan ready to do their thing, right? This is the season for that. So if you want to set yourself up to make some money, what I'm going to tell you is this: the formula I'm going to show you today has such a rock solid foundation. Okay, that our students, no matter what's going on in their life, all right, they can use the Forex market to at least generate, let's say, a secondary income for themselves, right? Make an extra $2,000, $3,000, $4,000 a month. All right, so if that's what you came to do today, all right, find that thing that sort of gives you that breakthrough. Well, I'm going to take you through it. All right, Renee already introduced me, but I'm going to go ahead and give you a couple of particulars very quickly. That's my smiling face. All right, I'm Joe Cavallaro. I'm going to be your host. All right, I've been trading markets, gang, since I graduated from college back in 1994. All right, I've traded them all. All right, I've been licensed in all of them: stock, options, commodities, futures, and Forex. All right, I've been a principal at a couple of firms. I've traded the big accounts. Fair enough. And I've also managed some trading desks. Now, why is any of this important to you right now? All right, I'm not bragging on my resume. What I'm telling you, though, is I've been doing what you're doing. Okay, fact of the matter is, I still got my ID card from when I used to do this at the World Trade Center. It is what it is. I know the difference between the markets. And the biggest thing for you is this: you got to find the one that gives you the best shot at making the money. All right, the one that's got the lowest risk and the highest return. Okay, I can trade any market. And the fact of the matter is, you can make money at any market. But when you see the advantages all right, of trading this Forex market, I got to believe that once you see them, once you understand that that's what's working to your advantage, okay, not only are you going to think about trading this market, but you're going to do it, okay? And look, I've managed trading desks for many years, okay, 10 or 15 or 25 traders at a time. My job, always the same, make sure everybody's profitable. Okay, that was my job. Make sure everybody's got the tools for success and they can translate this so that when their profit statement comes out, right, at the end of the day or the week or the month, it's got some green on it. Well, that's what I'm going to do for you today. All right, I'm going to act as if when you just logged into this presentation, what you really did was you just pulled up a chair at my trading desk. All right, and you're looking at me the same way all traders look at me. They're going to show it to me, right? Show me how to make some money. Well, that's what I'm going to do for you today. All right, by the time we're done, you're going to have this Forex market in your back pocket. We're going to go live so you can see it as it's happening, okay? Because anybody can get on a webinar and they can teach you some theory, okay? They can dazzle you with graphs and charts and they can dazzle you with vocabulary, all right? That's all fine, but instead of telling you stuff, what I'm going to do instead is I'm going to show it to you, all right? I'm going to show you a formula so you have all the steps, right, in order, something that you can take away from here and use today. All right, I'll show you where to get into a trade, where to get out of a trade. I'll show you what the opportunity is. If it makes sense, you give yourself a shot at it. Fair enough? All right, and yeah, the formula, write that down, formula, okay? Because it's not a secret, gang. Trading success is not some big secret, okay? Trading success is not a secret. It's out in the open, okay? So you don't come to learn a secret. You come to learn what? Just give me the step. Well, that's going to be your biggest takeaway from me today. All right. And I'm talking quickly for a reason, because I got a lot to cover and I want to make sure you get all the steps so that you're able to get this in your back pocket. All right. And get out there and go do some trading. All right. I got to prepare you to do that because the only way to make the money is to get out there and do it. You got to have the confidence. You got to have the clarity. Okay. You've got to have the things that you need right in front of you so you can say, okay, A, B, C, D, E, let's go out there and do it. All right, I'll give you a shot at all that today, right? If it makes sense, you come trade with us for a little while and you'll see how it all works. I'll give you a chance to do that. Anything I show you today, all right, you're going to be able to take advantage of risk-free to you. All right, so we're going to have some fun. And if you stick with me till the end, I'll even give you your first 2 trades so that you can hit the ground running when it comes to all of this. Now, why do we need to talk about which market you should be trading? All right, I'm not going to tell you if you're trading the stock market, you're doing something wrong. Okay, because you're out there, you're trying to make a buck, all right? If you got a family, that's what you're supposed to be doing, all right? So I'm not going to criticize the effort, all right? But the fact of the matter is when you're trading the stock market, there's certain things that are working, let's just say, not as favorably as they could be, all right? What do I mean? Well, when you're trading, all right, execution is always important, all right? You want to make sure that when you're buying, when you're selling, you're always getting the best price, okay? But in the stock market, you got to understand when you push that button, the broker that you're trading through can hold your order for up to 17 seconds before they execute it. And the whole time they're holding it, they're trading against you. Did you know that? Well, that's how it works, okay? And that's going to cost you money every time, all right? Both when you buy and when you sell. Okay, that's slippage and that always costs you money. Well, in the Forex market, we don't deal with that because why? Because we got the most liquid market in the world right here. Okay, the Forex market is a $5 trillion with a T dollar a day market. There's always a buyer, there's always a seller. Okay, and when you click the mouse to buy or sell, the price you see on the screen is the price you get because your order is executed in 1 second or less. That is a major, major advantage. Okay, fact of the matter is it's going to lower your risk. All right, it's going to lower your cost, and that means money in your pocket, and that's something you always got to be thinking about. All right, now let's talk about leverage. Bang for your buck. All right, in the stock market, yes, there's opportunity. Okay, but if you see an opportunity, what do you want to do? You want to get 100 shares, 200 shares. You want to get a position that has some meaning. But in the stock market, you got to pay for the whole position. You want to go get 100 shares of Apple, $160 a share, that's 16 grand you got to lay out. All right, it's a capital intensive market. Even if you're just getting 100 shares of Coca-Cola, it's still $5,000 blocks. You understand? But the Forex market, we don't deal with those big cash outlays because in this market, you get 50 to 1 leverage. Okay, instead of laying out 5, 10, 20,000 at a time to take a position in this market, you know what you need? Probably $200. Okay, how does that work? I'm going to show you. All right, but you're going to get a lot of bang for your buck. You're not going to have to slide a lot of money over into a Forex account to really do something that has some meaning. I can show you how to do with a couple of grand what it would take a stock trader to do with 100 grand. Okay, so we're going to talk about that as we go forward also. But here's one of the main advantages of the Forex. Okay, when it comes to trading, you got limitations in the stock market because it's only open certain hours of the day. Some of you know what I'm talking about, right? If you want to go trade stocks, you got to be there during certain hours. Okay, and for some of us, that's easy enough. We're retired or we live in the correct time zone. It's convenient. All right, but if you live in London, right, or you live in California, okay, you're setting your clock for all kinds of wacky hours just to be able to participate. But the Forex market, we don't deal with that because we got a 24-hour market. Write that down. This market is open from Sunday at 5 until Friday at 5 Eastern time. And the whole time in between, the market's open, which means any time of the day that you can squeeze it in, some of your trading time, some of that personal time, some of that you time, right? Any other time you're taking care of your family, your kids, your job, and so forth. But anytime you can finally get that couple of fun minutes for yourself to crack open your laptop and say, okay, let me go look at some charts and do some trades, this market's going to be waiting for you. And that's what makes it, in my book, so awesome. Okay, because you don't have to turn your life upside down to be able to trade it. Now, it's more than just flexibility. What do I mean? Let me talk to you for a second, all right, about the stock market. Those limited trading hours, all right, are going to limit your opportunity. Why? Because a lot of stuff happens when it comes to companies and stocks when the market is closed. Think about this for a minute. You're watching CNBC. Okay, and they say Amazon is going to announce their earnings today. That is a big event. You know it, I know it. Is Amazon going to hit their number? But what do they tell you at the very end of that little announcement? They're going to announce their earnings after the bell. After the bell, what are you talking about? Right? The market's going to close. Yep. And then we're going to tell you how we did. What happened last time Amazon announced their earnings? You guys know, right? They announced their earnings. First time they missed their number. Boom. Stock drops 30 points. Okay. But the market's closed. So you can't act on that. All right. Until when? Until tomorrow morning. By then it's too late. That limits your opportunity. All right. On the flip side, think about this. What if you held Amazon? What if you held a couple of calls in Amazon? Right? And the stock, what? The market was closed, and the stock drops 30 points. Okay? What did that just do to you in terms of your risk? It shot it through the roof, right? If you own calls and the stock just dropped 30 and you can't get out of the position until 8:30 the next morning when the CBOE opens, now you got yourself a problem. Okay, we just don't deal with that in the Forex market because it is so big, because it is so liquid, because it trades round the clock and it trades through every price. Okay, that means we can set our stops, we can set our limits. All right, no matter what's happening, we're not going to get these big gaps of time, big gaps of price, and it's a true trader's market. Okay, the stock market is an investor's market. It is what it is. Okay, and because it is, it's got a few more costs associated with it. Whatever. Investors, keep doing what you're doing. But if you want to be a trader, you got to find the market that lets you do all of this stuff. That's why traders are coming over here. That's why I'm going to show you how to do this today. That's why I'm going to show you, right, because of all these advantages, that you actually can make some money in this market, serious money. And it's not going to be hard for me to show this to you, gang. You know why? Because you probably know most of what you need to at least get the ball rolling. All right, if you know your major currencies, you're ready. If you don't know them, write them down. All right, I'm gonna go quickly. All right, I'm gonna make sure you got some good notes there. This is gonna be your Forex trading journal, day one. All right, write down the currencies you're gonna be trading because they're on the screen. Okay, the US dollar and the Canadian, the euro and the pound, the yen, the franc, the Aussie, and the Kiwi. All right, these are the currencies you're going to be trading. The amount of opportunity that's in just those 8 is awesome, right? You don't have to have a PhD in economics to do this. If you know your major currencies, you're cooking with oil. All right, and here's how the whole thing works. Anytime you see a currency, all right, it's going to be followed by another currency because currencies trade in what's called pairs, and anytime you see a currency pair, it's followed by a number called the exchange rate. You know what that is. You've been traveling, you've been to the airport, you've been to one of those currency exchange booths. You know what an exchange rate is. It means you can trade what? One currency for the other at the going rate. Okay, well, those exchange rates are moving up and down throughout the day, and that is the number that we trade for profit. Okay, Forex traders, this is all we do. We trade exchange rates for profit, and whether they go up or they go down, we can make money on this in either direction. Okay, now when we got an exchange rate, it doesn't have to move by dollars for us to make serious money. Okay, it doesn't even have to move by cents for us to make serious money. All right, what we're going to do is this. We're going to look a little further to the right to these last two decimal places. Those are called the pips. This is where we're going to concentrate. Okay, the PIP stands for price interest point. It's these tiny little movements, less than a penny, okay, that we are going to look to capture as Forex traders, because the pips are where the profit is. Okay, and I will show you how this works. If you've done any trading at all, this is going to make total sense to you. Okay, let's just say we got a currency pair, the euro and the US dollar. Okay, let's say it's trading at $1.1805. Now, during the day, like today, we might have a strong euro, or we might have what? A weak dollar, or both. Well, if that's the case, what's that going to do? That's going to move my little seesaw here. That's going to move my exchange rate. Now, if it should move from, let's say, 118.05 up to 118.95, that is a difference of 90 pips. Do you see that? There they are at the third and the fourth decimal place. That is where the pips are. Okay, so that's the difference, 90 pips. So now what? Now you know where to find them. Okay, so what do you have to do? Well, as a trader, you've got to get out there and capture these. Okay, what do you have to do? You got to have yourself a Forex trading account. If you don't have one, I'll show you how to open one in a second. But all you're going to do, gang, is the same thing that traders do. You're going to buy low, you're going to sell high, you're going to follow a formula, you're going to protect the downside. All right, this is going to be a repeatable exercise. And no, I'm not trying to insult your intelligence. Okay, I'm trying to let you know that this is all it is. All right, buy low, sell high. You got to be able to do that in a Forex trading account. Now, if you got one already, great. If you don't have one, you got to get one. Okay, and I'm going to show you something that you have to do today. This is like step one on your path to being a Forex trader. You got to open yourself a Forex trading account. Now, some of you, if you've got a trading platform already, you got TradeStation, you got E-Trade or one of these, right? They probably already have Forex capability. You got Options Express or so forth. Just go to where you normally go to do your trading, find the Forex button, right? Click on it and get yourself a Forex permission. Okay, they'll send you the download link so you'll have a platform to trade from and you're ready to go. That'll take you 5 minutes. Okay, now if you don't have one of those, all right, and you're not working with one of those brokers, here's what I need you to do. You got to go to one of these brokers to get yourself an account. Well, who do I work with? Let me just explain. I showed you my account earlier with Oanda. All right, here, OANDA. Watch this, how easy this is. All right, you want to open a Forex trading account, you go to their website, Oanda. Okay, what you do is you come up here to the button that says open an account. All right, they're going to give you a choice. You want to do some live trading? You can do that today. Take you 5 minutes to open the account. You're not ready for that? You're a little nervous. This is new to you. Then you open a demo account so you can get comfortable with the exercise. But either way, watch this. When you click on that, it says open an account in 5 minutes. You can do it. All right, just give them your name, give them an email address, pick out a username and password, and click go. All right, once you do that, right, couple minutes later, you check your email. In your email, there will be a link that says, welcome to Oanda, click here. They'll want you to download their trading platform, and you can download it to your tablet, or you download it to your laptop, or you download it to your phone, whatever you're using. All right, this is what you're going to do. And now what? Well, now you got a place that you can trade your currencies. There's your euro, there's your yen, there's your Aussie, there's a buy button, there's a sell button, there's a chart. Okay, nothing you're unfamiliar with. The only difference is the instrument. Okay, but you'll be able to do this in a couple minutes. And no, you don't have to go to Oanda. I mean, I showed you that one. That's who I'm using, but I don't recommend brokers. Okay, that's not my thing. Okay, I mean, I'm showing you the one that I use. Maybe you think to yourself, well, if he's using it, I might as well take a look at them. That's true. Okay, but I'll show you another one so you can do your due diligence. And know this, we're not a broker. All right, so we're going to trade with you, but we're not going to hold any of your money. Okay, you got to have an account though. How about you go to forex.com? It's the same process. You either open an account or you test drive it. Okay, it's the same thing, right? Give them some basic information. Just tell them what country you're in. Doesn't matter where you are though. You can be in Argentina, you can be in the Virgin Islands, you can be in Fiji, right? Or Kenya, right? Doesn't matter where you are. Just let them know, right, which currency you're going to be making your deposits and withdrawals in. That's just going to help everybody do things that much quicker. All right. But then you give them your name, right, your email address, so forth. You got an account open with them in 5 minutes. That's a bare minimum. All right. And my serious people, right, somebody just said, I just opened the account. Good. Right. See how quick you could do that. All right. So now what? Now you got a place to trade. So let's talk about two things. Let's talk about your investment and let's talk about your return. Right. We'll get right down to business here. All right. Anytime you are a trader, all right, everything you do is going to be based on your confidence. All right. How confident are you in what you're doing? How confident are you that your stuff works? Okay, because that's going to determine a couple of things: how much money you put in and how much money you take out. I mean, it's just an equal equation. All right. Well, in this market, listen, you got a couple of choices, and one of these is where you're going to start. All right. You're going to start either with micro lots, mini lots, or standard lots of currency. Write that down: micro, mini, standard. All right. Now, this is where the investment part comes in. Well, what do I need, Joe, to trade the Forex? Well, if you're going to trade micro lots, you need $20. Okay. $20. A micro lot trade is a $20 trade. Okay, not a lot of money. You're right. What can I really do with that? Not much if you're trading stock. Well, you buy one share of something. You can't use $20 to trade options. They won't let you. The cost of your ticket is more than that. But in the Forex, listen, you got 20 bucks, you can trade it. Okay, and again, not trying to insult anybody's intelligence. I know you got more than 20 bucks. Okay, but this is probably the right place to start so that you can do what? Figure out that your stuff works and that you know what you're doing. Okay, once you see it, once you see, oh wow, my formula that he showed me, that thing works pretty good, right? Well, then you'll be able to step it out a little bit, right? It's just going to be a very natural progression. You'll just step up to the next level, right? And that's when things will start to be a little bit more substantial, right? You trade mini lots. Now, what do you need for that? $200. Okay, still not a lot of money. All right, but $200, right, is going to be where things start to become a little bit more substantial for you, because you'll be trading many lots of currency. And again, you'll go through the same process until finally, right, you're trading standard lots. And this is the one I want you to circle on your paper right now. All right, you've got to get to the point. This is your goal, right, to be trading standard lots of currency as quickly and confidently as possible. Okay, because this is where this exercise is going to mean the most to you. Now, what do you need for that? Just $2,000. So I don't know where you fit, okay, on this little grid here. You're trying to decide that for yourself. But what do you notice? You don't need a lot of money to do this, period. All right, if you got $2 grand, right, in this market, I'm going to tell you that is all you will ever need. Okay, so now what? Now you know the investment part. You're not too scared of that. So let's talk about the return. Okay, that is where the pips are going to come in. The pips are where the profit is. Okay, and when you trade micro lots, every one of those pips you collect, it's going to be worth 10 cents. Write it down, 10 cents. Okay, so let's go back just real quick to that euro trade that we did a minute ago as our example. We made 90 pips, right? 90 pips times 10 cents is a $9 return, okay, on a $20 investment. Okay, so what is that? 9 out of 20, that's 45%. Okay, it's a nice percentage. Not a lot of money, I know that. $9, you can't do much with that. You buy a little Starbucks with it. But if you're making 45% and that's repeatable, okay, you and I both know that you're not going to be trading small for very long, at which point, okay, you'll step it up to trading mini lots. That's where things get a little more fun, because now the pips are going to be worth $1. Okay, and make no mistake, all right, the trade itself is going to remain exactly the same. What do I mean? In our euro example, we bought low, we sold high, we made 90 pips. You are always going to be trading for the pips. All right, but in this example, because you started with just a little bit more money, $200. All right, now you get to take out a little bit more money. 90 pips times $1, that's $90. Now we're getting somewhere. All right, but the reason I told you I want you to circle standard lots on your paper is because, gang, when we trade those, the pips are worth $10 a piece. Okay, and you already did the math, right? 90 pips times 10, that's $900. That's right. Okay, on a $2,000 investment. Now you're starting to see where I am going with this. And this is really the beauty of the Forex market. Okay, it doesn't take a lot of money to make a lot of money. And I don't care who you are, $900, you do that 2, 3, 4 times a week, right? You make yourself $2,000 or $3,000 a week, that's serious money. I don't care who you are. Okay, so now what are you thinking? Well, yeah, that sounds pretty good. All right. But what about the downside? How often does that happen? I mean, Joe, you got to tell us the whole story. Anybody can get on a webinar and start talking about making $900 a crack, right? What's the whole of it? Okay, let me explain. All right, you want to know how often 90 pips happens? It happens in every currency every single day. Okay, I'll show it to you. We'll go live. You'll be able to see it. And you do not have to capture all of these, right, in order to make good money, right? You don't even have to capture one of them. If you can get half of that, right, 45 pips a day, that's $450 a day. Okay, that's $2,200 a week, right? You're still living pretty good at that point. I can show you that. Happens every day. All right, so now what? Well, what's the downside? Well, I got to show you that too. All right, I got to show you that so you know, right, that I'm not just taking your hard-earned money, throwing it against the wall, right, hoping that it sticks. Okay, if I was going to do that, that'd be a big waste of all of our time. Okay, what I'm going to tell you is this, that downside protection is built into the formula. You give me a little over an hour here, I'll show you the whole thing. All right, then you just decide if it's for you. All right, but you're ready to do it. You're ready to go live because now you understand the fundamentals. So let's just do it. Let's just go live so I can make this happen for you. I'm gonna do it using a piece of software, right? Everybody's got a piece of software, but I'm gonna describe this one to you, show you why it works, all right? Show you why we got over $1 million invested in it, and show you how it's gonna help you. You ready for this? Write this down. Ultimate charting software. Okay, every one of our traders already has this right on their desk. Okay, every one of our worldwide traders, we got 30,000 people that we support on a daily basis. Okay, they've already got this tool. Okay, all of our traders, of course, we've got it here too. When we get together in our trading room, we're all looking at the same thing the same way. Okay, if you've already got this and you're going through your 60-day trial period, good. I'm glad you're here. I'll show you a couple of trades today, right? We'll get you another one of those repetitions. Okay, but if you're new to this, that's all right. All right, follow what I'm doing here. All right, I'll show you what all the buttons do. And at the end, if you want to take it for a 60-day test drive to make sure that it works, I'll let you do that. All right, so let's make this happen. Okay, but here, why is this going to help you? All right, what makes our program so great is no matter what currency you're going to look at, okay, no matter what time frame you want to look at, this is going to help you because, right, it's going to answer the 3 questions you've got to answer every time you trade. Okay, you've got to answer this before you risk even a nickel of your money. You've got to know 3 things. Number 1, you got to know, gang, which way are we going? All right, which way is the market going? That's pretty critical when it comes to trading. All right, if you know we're going up, you know how to trade it. If you know we're going down, you know how to trade it. This will tell you which way we're going. Then what'll it do? Well, it takes another step. It'll tell you where and why you're going to get in the market. It'll also tell you where and why you're going to get out of the market. Now, what makes it work so well, right? Everybody's got software, Joe. Why should I be looking at yours? Well, what makes it work so well, okay, is the way the Forex market itself works. Now, what do I mean by that? I've been telling you, right, for the last 30 minutes, the Forex is different. The Forex is better, right? What makes it so different, all right, than any other market is right here, all right? The Forex market, unlike any other market, it repeats itself. Okay, it repeats itself. Write this down. The Forex does the same thing over and over and over again. All right, this market, gang, develops patterns, and we're going to be able to read those patterns, right? So we can make money at this over and over and over again. All right, now what do I mean? Well, anytime you're looking at a chart, you've looked at charts before, so this should not be new to you. You're looking at a candlestick chart. What do you notice? Well, pretty simple, right? When you see white ones, the market's going up. Right? And when you see blue ones, the market's going down, right? Sometimes what? Market's going up, right? Sometimes what? Market's going down, all right? But it never goes straight up or down. It always moves, it always moves in waves, okay? Market moves in patterns. Well, let's look at a couple patterns together. This is gonna bring this whole thing alive for you so you can really see how the market works. All right, the patterns that the Forex market works in, follow me. And yes, I'm going quickly. I have to, lots to cover, right? Reed and Renee, they're going to make sure I do this on time. Okay, the Forex market always moves in what's called ABCD patterns. Let me show you what I mean. All right, we'll start down here at the bottom. Beginning of this pattern, that's going to be letter A, that low price. Okay, what happens? You can see it right here. The market rallies to a high price. That's going to be letter B. Then what happens? Market pulls back to a low price. That's going to be letter C. Then what? The market rallies nice and strong to a high price. That's the end of the pattern, right? That's going to be letter D. So what do we got here? We got A, B, C, D. That is a complete pattern. Now, what happens after that pattern completes? The market repeats itself. Watch this, okay? As soon as this pattern ends, a new one is going to start. So at that high price, that's our new letter A, okay? Then what happens? The market pulls back down to a low price. That is letter B, new pattern, right? Then what happens? Market rallies to a high price. That is letter C. And then what? The market just about falls apart down here to a low price. That is going to be letter D. And then guess what? We do it all over again because the market does the same thing. Okay, over and over and over. This ABCD thing repeats itself and repeats itself and repeats itself. Now, a lot of people think that this is just random, right? Oh, you're looking at a chart, you're pulling things out, and you're making it sound scientific, but really, the market does what the market does, and it's all just random. Well, in the Forex market, that's not the case. These patterns, gang, all right, are not random. In fact, they're very natural. But my favorite word about this is that they're repeatable, right? But it's that they're predictable. And now, what do I mean by that? Okay, that's a word. Listen, if you're a trader, that's a word that gets your attention. Okay, got my attention when they were showing this to me. Predictable. What does that mean? Right? I looked at them and said, what do you got? A tool in here that can tell me where we're going next? Because if you've got that, sign me up. Right? Because that's what I've been looking for. That's what everybody's been looking for 20, 30 years, right? You got a tool that can tell me where we're going next. I'm going to go ahead and get that. And we laughed about it, right? And they said, well, wait a minute. What if the tool that's built in here could not just tell you which way you were going next, but how far you were going to go? Do you think that would help you? I said, of course. They said, do you think you could make money with that? I said, look it, man, if it works, anybody could make money with that. You got to show me that it works. And they said, okay, we'll do that. All right, so I'm going to show you, listen, I'll show you the same thing they showed me. You're going to be able to decide pretty quickly if it works or not. Okay, and what it is, gang, what's built in here is called the Fibonacci tool. Okay, the Fibonacci tool. Some of you raised your eyebrows because you know what the Fibonacci tool is, right? It's based on something called the Fibonacci sequence. Now, if you don't know what this is, pay attention. If you think you know what this is, I'm going to take you through it anyway because I bet you haven't seen this before in the Forex market. The Fibonacci tool, right, is the thing that's going to measure the patterns. That's what you're going to use to make some money. All right, now how does it all work? What is the Fibonacci? Well, it's actually a person. Okay, Fibonacci is a person. He's an Italian, a mathematician from way back in the 13th century. Now he's famous because why? Because he came up with a sequence of numbers, right, called the Fibonacci sequence. Can you imagine, right? This sequence of numbers can be used to measure everything in nature. In fact, if you Google this, right, after we're done, you Google Fibonacci, you're going to find out that the Fibonacci sequence is called nature's numbering system. Write that down, okay? Because what Fibonacci figured out, okay, very important, was that everything, right, in nature follows a natural and predictable, my favorite word, pattern, right? And the fact of the matter is you can use his sequence of numbers to measure all of it. I'll just give you a quick example, right? You see this fish, right, part of nature. What's it made up of? Let's zoom in on it very quickly, right? It's made up of scales, okay? Now, if I said to you right now, how many scales make up that fish? What would you do in order to give me an answer? You would try to count the scales on the fish one at a time. But guess what? You don't have to do that. Why not? Well, let's take a closer look. Why not? Because that's not a random number. That's a natural and predictable pattern. Look how those scales are in rows. Look how those scales are in columns. Okay, that is not random at all. That's a natural and predictable pattern. You put the Fibonacci sequence right on that fish, it will tell you exactly how many scales are on the fish, right down to the last scale. No kidding? Well, that's how it works. Okay, natural and predictable pattern works on everything. Look, here's a flower, right? Nice, good looking sunflower. Well, how many petals are on it? Well, that's not a random number either. That's a natural and predictable pattern. If you put the Fibonacci sequence on the flower, boom, it'll tell you exactly how many petals are on the flower. And when I say this works on everything, gang, it works on everything. Look, that is a flight of stairs, okay? But guess what else it is? Look closer. It's also a Fibonacci sequence, all right? Fish, flower, stairs. Guess what else is a Fibonacci sequence? You are, okay? You remember this diagram, right, from science class. That is the Fibonacci diagram of the human body, okay? We use it to measure our symmetry. Do you realize right now, if you personally told me exactly how long your arms are, do you know what I can do without even looking at you? I can tell you exactly how long your legs are. You know why? Because that is a natural pattern too. Everything follows a natural pattern. The length of your arms, the length of your legs, the shape of your ear. Okay, it's all natural, it's all predictable. Now, it's all fascinating, but what are you wondering? Well, what does it have to do with this? right? Joe, it's great, right? We're in a science class. What does it have to do with trading? It's got everything to do with trading. Why? Because the people around here said to themselves, okay, hold on a second. These patterns, right? Forex obviously follows patterns. What if they are natural and predictable? In other words, what if we put this Fibonacci thing into the Forex market and it worked? We could make a ton of money with that. That was their thought process. Well, guess what, gang? They put it in there and it does work. All right, this is what we've been teaching people 23 years. You want this thing to come alive for you? I'm going to show you how it works, and it's not going to be hard for you to do, okay? All you're going to have to do is pull up a chart like you're used to doing already. All you got to do is find the low prices and the high prices like I've done right here. All right, you're going to look for low prices and high prices and what we call U-turns. All right, when you find a U-turn, listen, when you find a U-turn on the chart, you see that, how the candles are in the shape of the letter U? The bottom of that is a low price. You're going to give it a label. All right, when you find yourself a U-turn, but it's upside down, you see that upside down U shape in the candles, right? The top of that is a high price. You're going to give it a label. All right, and if you can do that, if you can find the low prices and the high prices, right, give them a label. All you got to do at that point is break out with the Fibonacci tool. You'll be able to do this. Now, where's the Fibonacci tool? Right here. All right, let me show you what the buttons do. So when you get this, you're ready to do it. Okay, you're going to come over here to the button that says Fibonacci tool. You're going to click on it. All right, it's going to drop down a menu. First thing you see says MTI Fibonacci tool. I want you to click on it. Okay, when you do, look at your cursor turns into a pen. I want you to come over to the pattern. All you've got to do is draw a line from low price A to high price B. All right, when you do that, when you draw a line from low price A to high price B, look what happens, right? The Fibonacci sequence appears right on your desk. That's what this is, all right? That's these numbers, okay? It looks like a step ladder, right? It's color coded. What is this tool doing? First thing, it's measuring the first part of the pattern, okay? From A to B. You see that? Okay, but what happens when you get to B? Market stops going up. And very naturally, all right, nothing goes straight up. Very naturally, it pulls back down here to a low price, okay? Market pulls down to a low price, and then what happens? Well, then it makes another one of those U-turns. So what do? We give that low price a label. That's going to be letter C. And I want you to notice, all right, where letter C is. Now watch this, very important. Okay, you've got to notice where letter C is. You've got to notice where it lines up with one of these Fibonacci numbers. You see that? It lines up with this red one right here. That's going to be significant. Why? Because, write this down. Because some people call these Fibonacci numbers energy levels. Okay, I call them a little bit different. I call them trampolines. Okay, because it's easier to remember and it shows you, right, what happens, how it acts on the price of the currency. What do I mean? Watch this, watch this. The market has pulled down to a low price. That's letter C, right? What happened is the market did what? It came down to this low price, right? Then it bumped into this red Fibonacci number, this energy level, this trampoline. Okay, well, what happens when you jump on a trampoline? You go bouncing off, right, in the other direction. Well, look what happened to the currency. Once it hit this trampoline, boom, it went bouncing off in the other direction. It had energy, right, very natural energy, right, off of that trampoline, right, and that energy was carrying it to the upside. In other words, right now, gang, this thing has energy going up. It's going up. Well, if it's going up, I know how to trade that. Of course you would. All right. If this is the only thing this tool could tell you, you'd still have to have it. All right. But here's the cool part. All right. This not only will tell you which way you are going, but it will also tell you, right, how far you are going to go. Now, how in the world does it do that? Couldn't be any easier. Okay, here's how it tells you how far you're going to go. What you're going to have to do to make this work, to figure out how far you're going to go to where the end of the sequence is, A, B, C, D, that's the end of the sequence. In order to figure out how far you're going to be going, right, what you got to do is match the color of the trampoline down here that you're bouncing off of with the same color up here. Let me say it again. Okay, to use the tool, you've got to identify which color trampoline you're bouncing off of down here, right? Once you got that, all you got to know is the same color up here. So in this case, we're bouncing off the red one, which means not only are we going up, but we're going to keep going up until we get to this red line way up here, because red trampoline is going to go to red line. That's how this works. Okay. Well, how do I know that it works? Well, you can see that it works. Look what happened. Not only did the market keep going up, right, but it kept making higher lows and higher highs until what? Until it got to this high price right up here. Then look what happened. The market changed direction. You know why? Because the market reached that red line. Do you see that? Red went to red. That's where the sequence ends. That is a complete ABCD pattern. That is a complete Fibonacci pattern. Now listen, all right, the first time I saw this, gang, I was just about on the edge of my seat because that's the first time anybody showed it to me. Holy cow, that looks like it works. You're right. But anybody can show you something that works one time, okay? You need to do what? You need to see that this works repeatedly. You need to see, right, that this Fibonacci thing works over and over and over again. All right, once you see that, you're going to realize, okay, that this is how the market works. So let me keep showing it to you. All right, you're very close. Now you know how the tool works. So what do we got here? We got another ABCD pattern, right? As soon as this pattern here ended, right? Soon as this pattern here ended, get that out of there, right? Then what happens? Well, a new pattern starts. Okay, so this old pattern, ABCD, that's now over, right? Now we start a new pattern in the same place. Okay, we got an ABCD. We labeled our high prices and low prices. Okay, what do we need to do at this point? All we need to do is get out our Fibonacci tool to see if this holds water. We're going to draw the same line from A to B. Do you see that? Now we're looking at a new pattern. Okay, the key to this is, where is letter C? Okay, which trampoline are we bouncing off of? Because if we bounce off a red one, we're going to that red line. All right, if we were to pull back lower in this example and bounce off the blue one, the way this works, gang, is we're still going to bounce, but only up here to this blue line. Okay, in order to understand the energy, you've got to understand the colors. Okay, but the simplest way to do it is say, okay, if I'm bouncing off a red one, I'm going to red. If I'm bouncing off a blue one, I'm going to blue. Okay, and you probably already figured out the last one. If I'm bouncing off the green one, that means what? I'm still going up, but only to the green line. Okay, so in this example over here, what are we doing? Well, the market has gone from A to B, then it's rallied to a nice high price C, but then look what happened. It bumped into this red trampoline right here. Okay, and now what? Now it's got energy to the downside. You can see that with your own eyes. Okay, and look how linear that is. That's not a mistake. I just want you to know. You see how linear this is right here? That's not an accident, all right, because we're dealing with the mathematics, right, of energy, of the universe. All right, so we're always going to see these linear looking patterns, and that's even more fascinating. That's kind of the deep end of the pool, though, right? I think what you're wondering right now, though, is that thing really going to go to the red line? Because if this holds water, that's what it should be doing. Well, take a look at what happens. Not only does the market continue to go down, but it continues to go down until what? Until it does hit that red line, and that's where the sequence ends. A, B, C, D. Now what? Now you've got another example of it working. You got an example of it here working in an up market. You got an example of it working in a down market. You've got an example of it working consecutively. Do you see that? Now, if you can see it, you don't have to be an expert yet, but I've got to check in with you, okay? Because I've been talking for a while here, but that's out of necessity. I got to keep moving quickly, all right? But what I'm going to ask you is this. Can you see those patterns? If you can you please type ABCD in the chat box, all right? If you can see the patterns, I want you to type ABCD. This is important. I can't lose you here, all right? Because this might be the most important thing you ever learn when it comes to trading, ever. Okay, not because I'm teaching it to you, but because I know that this is the case. This is bringing the market to life for you here. And if this keeps working, right, over and over, all of a sudden you're going to put yourself in a position to make serious money. But I got to know if you can see those. So type ABCD while I get a sip of water. I'll give you 5 seconds to do it. All right, good. ABCD, Ken, Hermino, Travis, Winston, Alex. All right, good. ABCD, ABCD. Screen not being shared. It's got to be being shared. You got to be able to see that. Good. ABCD. Good. All right, guys, you can see it. All right, guess what? You've done the hardest part. Now it's come alive for you. Now you've done a couple of run-throughs. Now the only thing you've got to do is repetition, because repetition is going to build two things: your muscle memory, so you know what you're doing, and your confidence that it works. Okay, well, here's what we're going to do. We're going to do the same thing right here. Okay, because we got ourselves another pattern. When you pull this up on your screen, anytime you're looking at a chart, I don't care what it is, New Zealand dollar, US dollar, Japanese yen, okay, whatever, you're going to be looking at candlesticks. Just do what I showed you. All right, find the U-turns, give them a label. Here, U-turn, beginning of the next pattern, that's letter A. Market rallies to a high price, does another U-turn. Give that high price a label, that's letter B. Then what? Market pulls back down, right? Now it's making another U-turn, so give that low price a label, that's letter C. What's the only thing that's missing? That is letter D. Why is it missing? Because it hasn't happened yet. It hasn't happened yet, but we can find where it's going to be. How? Go up and get your tool. Go click on it. Go draw your line from A to B. Okay, now what do you got? Now you got yourself a brand new pattern. All right, let's zoom in on a little so you can see this whole thing. What's happened? The market has pulled back down to a low price. Okay, now what's it doing? It's bouncing. You can see that with your own eyes. Market's bouncing. Okay, now what's it bouncing off of? This is critical. If you didn't have this tool, you wouldn't have a clue what it's bouncing off of. But look, you can see it. Look how linear that is. Bouncing off this red Fibonacci number, which means what? If this works, if this works, if this works, that means the market should not only go up, it should keep going up till it gets all the way up here to this red line. Red goes to red. That's where letter D is, way up here, but it hasn't happened yet. So what am I going to do? I'm going to call this by a different name. I'm not going to call it D. I'm going to call it future D, because that is where we are going. Well, if that's the case, what did we just do? We just found ourselves a profit opportunity, right? You buy low, you sell high. This is the money to be made if this works. Well, what's it all worth? Well, let's find out. Let me click on the candle, right? What's the closing price of this candle? 71.81, right? So that's the price we're working with right now. Okay, where are we going? According to this, we're going to the red line. Well, that's not just a color, it's a price. Okay, this will tell you right down to the last pip where you're going, 74.01. So guess what? I'm going to put that right here also, and I'm going to do a little math. Okay, so you're going to do this same step. If 74.01 is where we're going and 71.81 is where we are, that's a difference of 220 pips. Write it down, 220 pips. Now you got to decide right now how you're going to trade this. How confident are you? Most of you, not very. Why not? You've never done this before. So you know what you're going to do? You're going to do this in your practice account. All right, no risk there, right? They'll give you some money to trade with. It's not your money. So go ahead and trade with that. Okay, but at the very least, when you start seeing this works, that's when it's going to come alive for you. So if you're not very confident, you're still going to get something out of this, right? Do it as a practice trade, a proving trade. Now, if you got a little bit of confidence, right, what are you going to do? Well, I already showed you this worked a couple of times, so you're going to decide micro, mini, or standard. Now, if you do it as a micro lot and it works, what are you going to do? You're going to trade $20. Right? If it works, you get your $20 back plus 10 cents a pip. So you're going to make a $22 profit. If you do it as a mini lot, right, that's a $200 trade. Okay. If it works, you get your $200 back plus $1 a pip. That's $220. Why did I tell you? Why though? Did I tell you? I want you trading lots of currency. Right? Because if you want to make serious money, gang, right, $10 a pip, this thing works, well, then you're making $2,200. That's worth talking about. 110% is a worthwhile conversation. Okay, not 10%, 110%. Well, how are you going to show me that it works? Easy. Watch this. All right, I can show you that it works just by going forward in time. You'll see that it works. Look what happens. The market continues to bounce as I go forward in time. Now, look, it's not going straight up. They never do. All right, we wish they would, don't we? Right? Yeah, I wish that thing would go right to the red line right away. But look what's happening. It's making higher lows. It's making higher highs until what? Well, if this works, it's going to go right to that red line. Look what happens. On the 1, 2, 3, 4, 5th day, it goes right up and it kisses that line. Kisses that line. Why? Because this is not random, gang. It's a natural Fibonacci pattern. It's all based on that energy. It's all based on the fact that this is natural and predictable. Market goes up 1, 2, 3, 4, 5 days later, you make $2,200. Joe, I can't wait to get it. Well, guess what? You can, right? And if you want to give this a shot, you don't have to wait for me. All right, I've got a huge group here today, and I'm going to tell you, the more I show this to you, the more every last one of you is going to at least have to give it a shot. And the most democratic way I can think of, okay, for you to express your interest in this and say, yeah, I'm going to give that a try, is use the chat box. Let me know that's something you want to do. All right, if you would, right, the best way to do this, give me a good way to reach you, because at the end, either me or one of my traders is going to call you. All right, we're going to dot I's, cross T's, give you a download link. All right, give you a username and a password so you can put this thing to the test for the next 60 days. Give me a good way to reach you, right? A good phone number. All right, I'll reach out to you. We'll take you in order. All right, the sooner you put in your number, the sooner you get a spot in line and reserve one of those spaces. Fair enough? You don't have to do it now, right? If you're interested in that, you don't have to wait though. All right, some of you want to see more information, which is fine. When it suits you, you stick your number in the chat box, you become a part of the group. Okay, but the fact of the matter is, gang, look at what I just showed you. This works over and over and over again. You just made $2,200, okay, in the last, what, 1, 2, 3, 4, 5 days. What did you do? Let's not make it complicated. You bought low and you sold high. Now everybody says, why would I sell? That thing's going up. Okay, because you got to follow the rule, A, B, C, D. Once you get to the end of the sequence, it's time to go. Look, end of the sequence here. Look what happened. We changed direction. A, B, C, D. End of the sequence here. Look what happened. We changed direction. Okay, what's going to happen next? We're going to change direction. Whoa, hold on. What just happened? What do you mean what just happened? We changed direction. This sequence was over. Now we start another one. And the person that doesn't have this, they just gave back their whole profit. But because you do have it now, instead of giving back your whole profit and then some, you get out here with clarity. You're at the end, A, B, C, D. Then what do? You just wait for the next sequence, and guess what? That's coming, because that's how this works. Okay, it's just another A, B, C, D, and this works over and over and over. I just showed it to you 3, 4 times, and it works in all the currencies. All right, this works, gang. Some of you are saying, does it work on the 1-hour chart? Good question. My day traders will be happy to know. This works in all the time frames. Okay, it is measurable. Right? Don't think that it isn't. It is repeatable. That's why the formula works. All right, what's a formula? What's a formula? Something that works over and over again. Well, it works because of the way the market works. It's the only market that does this. It's measurable, it's repeatable, and the best part is it is predictable. Okay, this is the key. You got to be trading the Forex market, gang. I'm telling you. All right, you get this under your belt, you're going to be cooking with oil, and I can show it to you on any of these charts, and now you're ready for this. Now I can move quickly, because when you pull up a chart, you got to bring it to life. Where are we going? Where do we get in? Where do we get out? Well, what we do is very simple. All right, you probably have already done this before. We bring the chart to life by drawing trend lines. Okay, I'm going to draw a couple of trend lines. You've drawn trend lines before, right? You know what a good trend line looks like. Look at this one down here. Right? Market comes down to this price, bounces up. Then it comes down again, bounces up. What do we call that? We call that trend line a line of support, right? Why? Because it's holding up the price of the currency, right? Yeah, Joe, I know what a trend line is. Okay, then what do we call this one, right? Market comes up to the trend line, sells off, comes up to the trend line again, right? Sells off, comes up to the trend line again, sells off. Well, that's a line of what? Resistance, right? Well, if you know that, you're almost all the way there. Right? All I got to teach you now is where opportunity is. Write these 3 words down. Breakout. Write down the word sequence. Write down the word repeat. This is the formula. You ready for this? Right? I'm going to show you how money's made right now. You're ready for this. All right? What's the most important event on this screen? All right? The most important event on this screen is right. Oop, wrong line. All right, hold on. Let me get rid of that so I can get a circle. Right? Goodbye. Right here. You got to see the most important event. There it is. All right, here. Why is this an important event? Why? Watch this, okay? What do we expect to happen here? Well, if this trend line was to hold, right, it would put a cap on the currency, right? It would sell off again. But what happened here? Instead of selling off again, right, this market broke through the trend line, That is called a breakout, right? And I want you to write that in your notes. A breakout, okay, is where money is made. You got to write this down, all right? You got to know what to look for if you're going to be a trader. We know as traders that when breakouts happen, all right, this is where money is made. This is where we got to bust out with our sequence. This is where ABCD comes in. Now watch how it works, all right? Once you see, all right, the market breaking out. Here, let me clean this up just a little bit, all right? Watch this. Once you see the market breaking out, okay, what you're going to look for is a strong move, okay? Now, you're going to use the same formula I showed you. You're going to find low price A. You're going to see where the market rallies to a high price B. Okay. Then what do you see? All right, what do I got here? I got a low price. You're right. Then what am I looking for? I'm looking for a U-turn. Well, that sure as heck looks like a U-turn. Am I sure it's a U-turn? Holy cow. That's a strong looking U-turn. So what have I just found? I just found letter C. Now I got A, B, and C. What am I missing? I'm missing letter D. What do I need to do? Gang, if I want to identify a profit opportunity, right, all I've got to do is the same thing I've been showing you. All right, I'm going to go ahead and draw my line from A to B. Okay, this is a totally different currency, totally different time frame. This is the 2-hour chart. Okay, but I'm showing you that no matter what chart you're looking at, you're always going to be dealing with candlesticks, and you're always going to be dealing with this ABCD thing. All right, if you need more proof that it works, just go ahead and start drawing these, because it works in both directions. Don't tell me that what I'm showing you doesn't work. If I see an ABC, right, red goes to red and it goes exactly, that tells me, oh my gosh, it looks like that thing works. I know, right? And no matter where you do this, no matter where you put your ABCDs on, right? No matter where, hold on, no matter where you put your ABCDs on, right? Because it's got to be consecutive, right? No matter where you do that, the fact of the matter is when you start seeing this work over and over again, it's got to at least give you some sense of confidence that the thing works. So what do you have to do at this point? You got to say, okay, it works. Let me go ahead and do it over here where I can make some money at it, because it's obvious there's money to be made here somewhere. All right, how much? Well, let's look at it. All right, if I'm looking at the market bouncing off again, linear, off this red trampoline, that means we're going all the way up here to this red line. That's not just a small amount of money to be made, that's a big amount. Okay, that's a big amount of money to be made. How much? Well, I'm looking at going to 149.89. My current price on this is what? 146.97. So that's what? 7, 8 away, 292 pips. You want to see how to make $3,000? All right, you want to see how to do this? This is what real traders do. All right, because 292 pips is serious money. All right, what do you have to do? Well, you got to buy low, and then you got to wait for the darn thing to go all the way up here to this red line. That's where you're going to sell high. All right, don't think that that part's complicated. All right, all you got to do is connect your trading account. You can trade right from the charts. You got a big green buy button. You're going to decide, okay, how comfortable are you? 10 cents a pip, I could do that. I know you can. Try it. Right? $1 a pip I could probably do, Joe. Okay, fine. Then guess what? You're going to say that right here, 10 cents, $1. If you want to trade for $10 a pip, though, we're talking about a $3,000 opportunity. All right? Go out and do it. Well, Joe, you make it sound so easy. Yep. Mechanically, there's nothing more to it. Okay? But if it was that easy, everybody would do it. You're probably right, right? And here's what I know. If I did a show of hands right now, and I said to you, right, you can make $3,000 doing this. How many of you can use $3,000? I'm going to have every hand in the room. Okay. But what's the one thing you're thinking about? Joe, you're forgetting the downside, brother, right? Any idiot can get on a webinar and start barking about $3,000, but you got to tell us what the downside is so we know that this makes sense. Well, that's what I got to do here as a last step. You have to protect your downside, because if you don't, I mean, look what can happen, right? Yay, get into the trade, right? You get it on your desk. What if it works? Okay, you make money. What if it doesn't? Do you go off a cliff? Well, you do, unless you're trading properly. Okay, unless you're trading properly. What you have to do is protect your downside. You're going to do that with what's called a stop order. Why? Because a stop order is going to build a floor underneath your trade so that you do what? Limit your risk. Okay, you got to build a floor. You got to protect your downside. Well, the beauty of stop orders in this market, gang, is guess what? Remember, I told you, market's open 24 hours, trades through every price. And it means if your stop gets hit, if your floor gets hit, that means you don't even have to be there and you'll be protected automatically. Really? You got to show it to me. All right, watch this. What does a stop order look like? Well, it looks like a floor. Okay, there's the floor underneath my trade. Right now, the trade can only go one of two ways. If it goes up, I make the money. If it goes down, it hits my floor, my order stops, it protects the rest of my account. Great. Okay, that's what a floor looks like. Okay, you're going to set this. We'll show you how to do it on every trade that you do. So you're not going on white knuckle rides, right? So you're not driving your spouse nuts. So you're not risking the kids' college fund for this stuff. Okay, you're never going to risk the whole 20 or the whole 200 or the whole 2,000. You're only going to risk a fraction of that. So from a real dollar standpoint, you're risking practically nothing. Okay, when it comes to setting your stop. But I don't want you just to set your stop arbitrarily. I want you to set it in a way that takes advantage of this ABCD. What do you mean? Well, look, you're either going to be a conservative trader or an aggressive trader. So you're going to set your stop in one of two places. My conservative traders, that's 80% of you. You're going to place your stop in an easy place to remember. You're going to place it at letter C. C stands for conservative. Okay, a conservative trader wants to do what? Risk as little as possible to make as much as possible, right? That's where you're going to set your stop then if you're conservative, risking as little as possible. Okay, conservative places the stop at letter C. Now, aggressive traders, there's a couple of you here, that's fine. All that means to be aggressive, all right, it's not a swear word. All aggressive means is you're willing to take a little bit more risk to make the money. Well, here, right, you're not going to do it haphazardly. You're going to set your stop in a specific place. You're going to set your stop at letter A. A for aggressive. Write that down. Okay. Now, why? Why would anybody be willing to risk that much more, right, when it comes to making the money? Well, an aggressive trader is willing to do that. If that's you, great. If it's not, then you're conservative. Okay. But the reason an aggressive trader doing it this way, right, is willing to do that is because they know the following. This is the last thing you got to write down. Then I'll show you target, then you get it on your desk. Watch this. All right. The reason aggressive traders trading this way are willing to place their stop way down there at letter A is because they know, right? They know that if the market, oh, come on, type. If the market, right, breaks down, but it does not break, okay, below the letter A, okay, if the market pulls back down, but it does not break below this line, below the letter A, let me finish the sentence, that means it has no choice but to go your way. Say that again. If the market pulls back down, but it does not break below the letter A, that means what? That means it has to bounce off of one of these trampolines, one of these Fibonacci numbers. It has to make that U-turn, which means what? It's got to complete the sequence. It's got to go up. Really? Get it on your desk, you'll find it out. It has no choice but to go your way and complete the sequence. And the more you see that, the more you're going to say, this is unbelievable. It is awesome. Okay. But either way you do this, I don't care. As long as you place a stop to protect yourself, now what can you do? Now you can just go forward. Now you can just go forward and say, okay, let's see if it works. And I think at this point, you want it to work. I think at this point, you want to see this thing go all the way to that red line. You know why? Because you've been looking for something that does this. Okay, you want it to work. Well, let's find out. Does it really go all the way up to that red line, right? Well, it's pretty darn close at this point. Now, it hasn't gotten all the way up there yet. Okay, but what can you do at this point? You can certainly raise your stop above break even, protect some of that profit. Now you can't lose. Now you can't lose. And as the market continues to move up, gang, take a look. Higher lows, higher highs until what? Until finally, it does complete the sequence. It does complete the sequence. All right, there it is. You completed the sequence. And how long did that take you? All right, that total move, all right, to get all the way up to that red line took a grand total of about 3 days. Let me just measure it to make sure that's true. Took a grand total of about 3 days. So you just made more in 3 days than most people make in 3 weeks. Okay, doing what? Clicking the mouse, doing something that works. Really? Look, get it on your desk and find out. We'll show you how this all works. All right, and I'm not showing you some ancient example. I'm not showing you something from last June. I'm not showing you something from February and cherry picking. I'm showing you something from last week. You know why? Because I like showing people stuff that's working now, that's working through different kinds of markets, right? But actually is just the same thing, all right? No matter what, you're looking at candlesticks. Are you gonna tell me right now that this, right, now that the market has completed this sequence, what happened? It changed direction. Are you really gonna tell me that this went from A to B, rebounded back to C, and then completed the sequence at D, and that's a mistake? You couldn't tell me that. It'd be impossible. Are you then gonna tell me, right, that the market, what, found a low price, then a high price? Are you really going to tell me, okay, here, I'll highlight this for you. Are you really going to tell me that this was an accident of some kind too, that the market pulled back down to this low price, which was what, right, lined up with the red trampoline, and it went all the way to the red line exactly, and that's a mistake also? The longer you decide that this is a mistake, the longer you're going to be leaving this kind of money on the table, all right? Is this going to get your kids to college if you make let's see, 127 pips? Probably not, but that's still $1,200, right? Fact of the matter is, this one right here, right, same thing. Even if I got the worst possible entry, right, I still made myself $650, right? So now I'm showing you, right, 350, 450, almost 500 pips I'm showing you. And if you're still not convinced that this works, all right, roll your energy forward on this one. All right, watch this. Roll your energy forward on this one. The old C becomes the new A, right? The old D becomes the new B. And what are you going to tell me? That this market pulled back down to this low price, right? Made that U-turn off this red trampoline, rallied all the way up here to this high price, and that's a mistake too? It's impossible for you to tell me that, okay? Because this works, it works in both directions, okay? It worked to the downside also. As soon as the market changed direction, what did you have? What is this? Is this another fluke? Is this another accident, right? The more you see this, gang, red goes to red, the more you see this, the more you're going to be able to do it. So now everybody says, okay, Smarty, show me a trade I can do right now. Well, I can do that. That's easy, right? All I've got to do is look at what I'm looking at right now. This is where the market is right this minute. So instead of doing what? Guessing, let me just go get my Fibonacci tool. Here, I got a tool that'll draw this out for me perfectly, all right? All I got to do is click on one button and it'll show me how often this continues to work. Now look what happened here. The market pulled back down to this green line, green trampoline this time, right? And look, we're not quite done going up yet. All right, we're pretty close. In fact, I don't know if I would even bother with this one because it looks like only a small fraction. In fact, it looks like, as a matter of fact, this one just completed while I was talking. So now we're going back this way. So I'm going to avoid this one altogether. But how long now did it take me to make that decision? Not very long at all. All right, just go out and find your Fibonacci's. Just go pull up any chart you want. Here's the pound New Zealand. All right, this is what's happening right this second. And if I pull up the smart Fibonacci, just go find a low price. It'll show me the current sequence. A, B, C, red line. This has got a little room to pop. All right, this one I like. Here's what we're going to do. Okay, this one I like. Here's what we're going to do. We're looking at 182.64. I'm at 181.02. This is your first trade. 182.64, 181.02. That's 162 pips profit. Okay, going long on this one. The pound New Zealand. I'm in love. You know why? Because look where my risk is. I'm going to be very conservative. I'm going to place my stop at letter C. Okay, so I'm going to risk. Take a look. I'm going to risk right here this little itty bitty amount, all right? And I'm going to look to make this big fat amount right here. Am I trying to help you? Am I trying to hurt you? You could do that. You know how many pips I'm risking here? Probably 20. Let's see. Not even. 22. All right, so that's an 8-to-1 risk to reward. I can do this trade all day. 8-to-1 risk to reward, okay? And this works. You want to get it on your desk? You're ready, okay? You don't have to wait for me. Joe, this is pretty cool. I'm going to give it a shot. Well, good. Okay, I told you I'm not going to convince you of anything, but showing it to you certainly kind of brings it alive, doesn't it? That's why we come here. That's why we do investor inspiration, to find these things that we didn't know before and put them to the test. Well, if you're ready to do that, you know most of what you need to already. The knowledge part is there. So now it's a matter of just getting out and doing it. The ABCDs, the Fibonacci's, you want to put this on your desk for 60 days, I'll make you into a powerhouse trader. This is what I've been doing for a long time, gang. I can help you. Period. End of statement. And the best way for me to help you ready for this? If you don't want to wait to do this. In other words, if you like what you see, all right, but instead of getting down to being a student of the market, you want to just be a results person. Well, I'm going to include target trading today because this is going to simplify the whole thing for you. All right, if you're a student of the market, I know you like what's on the left. All right, but if you got a busy schedule, you're going to like what's on the right even more because you can do this today. All right, take you 5 minutes to learn it. Give me 4 minutes. That's all I need. Renee, give me 4 minutes because I can teach them this. All right, at 5 o'clock today, here's what you're going to do. You're going to open up these charts. Okay, and instead of going through all of the analysis, you know what's going to happen? The program's going to analyze the whole thing for you, and it's going to print a target right on your screen. The highest probability with the lowest risk, just like I just did. Okay, what you're going to do when that target appears is trade to the target. That's it, right? If it's above the market, you trade up to it. If it's below the market, you trade down to it. But the best part about this is not just that it's simple, it's that it works. Okay, this has an 89% hit rate. You got to be kidding me. Show me that. Well, let me do it. 4 minutes is all I need. Then I'll show you how to get this on your desk. Watch this. All right, here we go. Okay, you're going to be able to look at this just a little bit differently. Any of you can now do this. Any of you can now do this. You want to do it manually? You can certainly do it manually. All right. What do you see here? No matter where you find your low price and your high price, as long as you find the trampoline you're bouncing off of, right, you can see where the sequence ends. And it works A, B, C, D in both directions. Great. But if you want to do this a little simpler, here's what you're going to do. You're going to take a little bit of a different look at this. This is called the target trading look. All right, I got to walk through this fast because I'm running out of time. Okay, what you're going to do is this. You're going to open your charts at 5 o'clock. This is a similar chart. This is the target trading look. All right, the candles, all right, are a little bit of a different color, green and red, as opposed to blue and white. Okay, that's going to help you. I'll show you how. I've divided this chart up into time periods. All right, these squares here, right, break the chart down into 1 week periods. Okay, so that's pretty simple. It's an hourly chart. Each of these represents an hour. The square represents a whole week. Now, what do you got here? Well, at 5 o'clock, okay, that's the end of 1 week and the beginning of another. Okay, so 5 o'clock Sunday, you're going to open your charts. What's going to happen is this. All right, as soon as 5 o'clock comes, the program does a calculation and this thing shows up on your screen. That is called a target. All right, once it appears, it never moves. That is the highest probability trade that you can do right now, okay, using this system. Okay, well, there's my target. What do I do? Well, if it's below the market, Okay, you're going to trade down to the target. Now, what's that going to be worth? Watch this. What is that going to be worth? If this works, it'll be worth 88 pips. So what I'm telling you is this. You open your charts at 5 o'clock, right? You got an 88 pip opportunity. If this works, you make yourself $880. Well, show me that it works. I can do that too, right? This is how you're going to back test it. You're going to go ahead and get this on your desk and say, okay, where was the target? And did the target get hit? Well, as you go forward in time, look what happens, right? Market continues to move where? To the target. Once the target's hit, guess what you do? You sell, you're out, boom, bye, you close your trade. How'd you do? You made $880. And how long did that take? Okay, it took you 30 hours. So now it's Monday afternoon, okay? You're up $800 for the week. Guess what? You're done. You get out. There's nothing left to do. Once the target is hit, make no mistake, that's where the risk and reward parameter changes completely. So you've got to get out of your trade at that point. That's where the program stops the help. All right, what you do after that is going to end up being up to you, okay? But what I'd like to see you do is nothing until when? Until that next target appears. Until that next target appears. So you're going to wait. You're going to wait for what? Sunday night, okay? What's going to happen? Target appears. There it is. Okay, Joe, you showed it to me once. How often does this work? Write it down. 72% of all targets, okay, are hit within one period, okay? And 89% of all targets are hit within 7 periods. What do I mean? Or look, most of your targets, listen to me, most of your targets are going to be hit almost immediately. 72% of the time your target gets hit, and you don't just make some money, you make all of it. Okay, wherever the target is, 88 pips, you make $880. All right, what's this one? Let me measure it. Okay, what's this one? This target gets hit. All right, that's going to be worth 84 pips. Let me write that down. All right, 84 pips. All right, so 7 out of 10 times you hit the target. But what about the times that you don't? What I'm going to tell you is this. Okay, using this system, okay, if you're willing to wait just a little while, even if your target doesn't get hit immediately, okay, almost 90% of the time, your target gets hit eventually. No kidding? Show it to me. Okay, that's what we're working with. And you don't have to be sophisticated at all. Okay, take a look. Market continues to move until what? Comes down, hits the target. How long did that one take? That one took a grand total of 14 hours. So now it's Monday morning. You're up another $840. Listen, the reason that it works is because of what I showed you. All right. Don't think that this is some fancy reinvent the wheel thing. All this is, gang, is the Fibonacci's come to life. What do you got here? You got A, you got B, right? You got C. Holy cow, Joe, that's what you're working with? You're doing the Fibonacci thing. You're just doing it easier. That's what's making new traders into good traders quickly. It's because they're taking what works and they're able to apply it because this does the homework for you. You see that? It's nothing more than ABCD. Okay, that's what this is. And if you continue to do it, if you continue to go forward in time, if you continue to understand that when that target appears, all you got to do is trade to the target. You don't have to be sophisticated at all. Okay, but you're going to find something that works. Now, listen, you want us to be a little more sophisticated, you can be, rather than just jumping in with your money and trading right to the target, right? If you got red candlesticks, what do you know? You know that sellers are in control at that point. So what do you want to do? Maybe you wait for a little bit of a better entry, right? Wait for a green candle before you go buying. What's that going to do? Save you from drawdowns. What's that going to do? Probably save you a little bit of Pepto-Bismol money, right? Because why? We want to get a good entry, right? We don't mind a little bit of a drawdown, but why would you take one if you didn't have to? What I'd rather see you do is wait for a green candle so you knew at least you had some buying company, right? Before you go jumping into the trade. That's going to make it into a better trade, but take a look, still hits the target, right? Still hits the target. And I can show this to you on every currency, gang, and I can show it to you over and over and over again. All right. Fact of the matter is, if you just did this once a week, Sunday, 5 o'clock, you go target hunting, you go find a good trade. And in this example, you make 141 pips. You are not going to be upset with that. This will be worth your time. It's a huge value. Okay. But most people say, well, great. If I make $1,400, I'm good. But if I make it by Tuesday, what about the rest of the week? What about the rest of the week? Well, you got one of these that'll show me a target every day? Of course I do. That's built in here. That's your next step. Okay. And when you start to see, look at that, this, right, works on a daily basis. All right. Look at here. I'll just bring up a different currency. This is right up to this second. Okay. This is the pound Australian 10-minute chart, right? 5 o'clock every day, a target comes out every day. Okay. It's based on the same thing. And all you're going to do is trade to the target. Look at the efficacy of the program. This one hit this morning. Okay, green candle, boom, made some money. Same thing yesterday, boom, green candle, hit, 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 hit. There's a miss, hit. Okay, 9 out of 10. 9 out of 10. That's the rate that I told you, right? Total 266 pips. Okay, doesn't sound like a ton of money, right? Oh, it's only $266 if I'm right. But if you had a 90% chance of making that money, think about it. You do it all day. You go target hunting every day at 5 o'clock. You find the big one, trade to it. Okay. That is what this program is doing. That's why it's taken our company to the next level. And here's what I know. I can show you 9 good ones, and you know what you want to do? You want to give me a hard time about the bad one. What about that miss? What about that miss? Good for you for asking. Traders would want to know. What about the one that didn't make it? What if I got into your trade here, Joe, right? And it didn't quite make it to the target. I'd still be in it, right? And then all of a sudden it goes away from me. Now I got a drawdown. You're right. Okay. That is a legitimately missed target. It didn't hit it. But look what happened. The next day, a target appeared, right, for that day of trading. And that target got hit, so you got to book that profit. But look what also happened. As the market continued to come down, it came down to here and picked up your missed target from yesterday and turned it from a miss into a hit. So now this day, you got 2 profits. And then what do? You wait for 5 o'clock the next day, you wait for a green candle, you trade that thing. Well, it looks like it works. I'm going to try it. Well, good. Then let's do it. Okay. Not up to me to do anything else at this point. You've got all the information. All right. You get it on your desk today. I'll make sure you have all the tools. There's a tutorial built in. So when it comes to using the auto Fibonacci, I did it fast. The TT 2.0, I did it fast. There's a tutorial built in. You get a username and a password. You go through the tutorial quickly. If you need some help, will help you. But the fact of the matter is, gang, you get this on your desk, you've got one of the most powerful tools and systems you've ever seen, right? Yeah. Is there a cost? Of course, $249 a month, right? You knew there'd be a cost for it, and there better be, right, for all this development. But any of you that wants to put this to the test, try it, test it, get on this team of ours today. If any of you wants to get on this team of ours today, become a student at Market Traders Institute, I will give you, all right, the software for 2 months for free. So you can test it, try it, make sure that it works, make sure that it works for you. But I can't do it for you. You got to let me know that you're interested. At this point, you got to put your phone number in the chat box, right? You got to let me know that you're interested, and we're going to have a conversation about it. All right. I know performance is important to you. Well, that's the stats. This is what we're working with. Third party verified. Okay. It is phenomenal. And the fact of the matter is, look at our last group killed it. Our last group, look at 21,000 pips year to date, okay? On a standard lot, that's 200 grand. You'd expect traders, okay, that are doing this as a full-time gig to be making serious money. Well, that is just trading a standard lot. Okay, so you don't have to bring a lot to the table, but that's what's kind of waiting for you, right, in terms of opportunity. Our last group did so well, told so many people about it on Facebook that people said, you got to bring that back. You got to make a new group. So that is what we are doing. All right, we are filling this up. We got 100 seats in that group. We got 10 of them left. And they said, well, show it to the investor inspiration people, because I'm sure 10 of them are going to get started with the thing. Once you see this, people are throwing their account statements at us. This is amazing. Look at how we're doing. We know why it works, because the Fibonacci's work, and this program simplifies the whole thing. All right, so if you want to get this on your desk, I'll tell you what, we're so confident that it works, we're literally going to give it to you. All right, risk-free for the next 60 days. That way, right, you don't have to sit here and take my word for it anymore. You can try it, you test it, you make sure it works for you. At the end of 60 days, that's when you make a decision on whether you want to keep it or not. All we're going to ask from you is that you give it an honest effort. So let's do this, okay? The program itself, the value of what you're getting today is massive, okay? Yes, you're going to get the tool by itself, all right? That's worth its weight in gold. All right, but we're going to take you through a class to make sure that you got all the strategies. I had to do things fast, okay, because I only had a certain amount of time, but it only gets better from here. There's daily, there's weekly. Wait till you see the monthly strategy. It's awesome. A lot of pips there, okay? The tutorial is going to be built in so you can show it to your spouse. You can show it to your friend, your trading partner, the person that you're saying, hey, wait till you see this thing. There's a tutorial built in. It's got videos. It's awesome. Okay, the charting software, of course, you're going to get that today. You come trade live with us every Monday and Friday. Your first session, I already told you, is Friday morning at 10 o'clock. Okay, that's when you're going to trade live with us. That's when you're going to get the setups, right? Get ready for Sunday. The movement we've got in the Euro gang just today has been awesome. So you got to be ready for this. All right, round the clock will help you, and will help you going forward, because this is what you want to do. You're going to be a trader. You're going to be a Forex trader. This is the lifestyle you want. Well, hell, we'll be there with you to do it. All right, and I'll give you 60 days to put it all to the test. Now, is that worth something? Yeah, we say it's worth about 10 grand. Okay, big number, no doubt about it. Right, but a lot of you are saying, well, look, if it works the way you just said, it's worth every penny of that. And guess what? I'm going to say that you're right. Okay, that's the value of what you're getting today, period. Okay, but here's the thing. Okay, you're not going to pay 10 grand for it. What did I say earlier? There's a couple of ways. Okay, you can get the program. One of these is going to work for every last one of you that's in the room. All right, you just got to tell me which one works best for you, and we'll get you started. Okay, here's the first way. Go to my website. You go to my website, right? markettraders.com. Jot that down. Okay, if you want, you go to Target Trading on our website. There's a place you can order this. Okay, MasterCard, Visa, American Express, or Discover. What we did was we bundled all this together so everybody who goes to the website can save a little money. And if you go to the website to get it, right, it's not 10 grand. Okay, it's less than half of that. It's $39.95, and you can do that anytime you want. Okay, and you'll have it for the rest of your life. Okay, but here's what we're going to do today. All right, we're going to do it a little different at Investor Inspiration, because we got 10 seats to fill, and we got to fill them by Friday. So what we said was, all right, let's make it so that everybody that's there can get involved. And what we decided to do is this. We decided for you as a group to take 50% off of this. All right, so we're going to take 50% off today, meaning you can get started today, all right, for a one-time investment of $19.97. That's 50% off the online retail, right? You save almost $2 grand on this right up front. Okay, and it's real easy to get started. All you got to do is put your phone number in that chat box. Okay, what I will do as soon as we break, and we're going to break right about now, all right, is I will either reach out to you, or I'm going to have one of my traders reach out to you. All right, we're going to answer all your questions, right? We're going to spend as much time with you as you need, but then, I mean, you're off to the races. All right, I think the only problem you're going to have here is that you didn't have this already, right, for the last couple of months and been working with it. Now, look, by putting in your phone number, all right, I want you to know. Good, Tom, I've got your phone number. Andrea, I've got your number. Teresa, good. Ladies, I got your phone number. All right, by putting in your phone number, though, I want you to know, all right, you're not locking yourself in. Okay, what it is you're giving yourself what's called the first right of refusal. By putting in your phone number, all right, it means you want to have a conversation, all right, and you want to reserve one of those spots. Okay, here's what's going to happen. As soon as I'm done, we're going to talk. Okay, we're going to make sure that this is a good fit. All right, you review it and you decide if this is right for you. If it is, then you get that spot. All right, you got it because you reserved it. Okay, now look, if you decide after we talk, you know, Joe, it looks great, but I don't think this is for me. Well, that's okay. All we'll do at that point is release that spot and offer it to the next person. Does that make sense? So we got 10 of those spots. All right, and what you're seeing is not going to be offered after today. All right, best way for us to do this is to just keep a limit on it so we can help those traders that get involved be the best traders with our stuff that they can be. So once those 10 spots are full, that's going to be the end of it. So if you got any interest in this at all right, reserve one of those spots. Just type your number in and at least get in line for that conversation. And if you're thinking, well, I want to do something, I just don't know if I can do $2 grand. Well, look, all right, I got a way to get you started, right, with a monthly payment plan. That part's easy. I can give you a little flexibility if you need it. As a matter of fact, if you've got $249, gang, I can get you started, right? In fact, I'll do better than that. I'll get the whole thing on your desk today, and then we'll just stretch the rest of it out over some time, all right, so that you get a little flexibility, a little pay as you go, right? A lot of people like that because it's more flexible. Okay, so whichever it is, right, if you're not sure how to do it, I'm going to just say put your phone number in and at least give yourself the chance to say yes or no when we talk. All right, so Robert, I've got your number. Richard, I've got your number. Eric, I've got yours. Sebastian, Anna, Enrique, wow, Ahmed, Juan Feliz. All right, I've got your numbers too. Now listen, for my Investor Inspiration group, I told you, we are launching Friday, okay, 10 o'clock. This is the key. All right, there are 10 spots left. So put your phone number in there right now. The only way to do this for us is to take you in order, all right? And so you have everything you need, okay? Let me just wrap it up with 3 bonuses, all right? So that you have everything you need to be successful. Here's what I'm gonna do. You remember I said I was gonna give you the charts for 2 months? Well, I'm gonna do better than that, all right? The charts are $249 a month, and that is recurring, okay? But I don't want you worried about $249 a month. The only thing I want you worried about is learning that ABCD, because that works. All right, learning target trading, because that works. all right? And I'll tell you what, I'll pick up your charts for 6 months, all right, so that you have every bit of time to concentrate, okay, before you have to start worried about $249 a month, all right? So I'll give you the charts for 6 months. That's the first bonus, all right? Second bonus, I'll let you work with us for 6 months, okay? Bonus number 2, you're gonna be able to, we'll hold your hand, okay, for 6 months, every Monday, every Friday. Okay, you come trade with us, you come trade live. Pretty soon you're gonna have this in your back pocket. But during the time that you're learning, why don't you come trade it with us? All right, if we're gonna put our money where our mouth is on the program, then we'll walk you through it. So Noah and Enoch and Sean and William, all right, I've got your number. William, I've got yours too. All right, good, good. And when I say put your money where your mouth is, come trade with us, what I mean is this, all right, if you get on board with this program, gang, listen, for your first 60 days, so that you get the opportunity to earn something, right, while you're learning this. What we're gonna do is we're gonna let you copy every single thing that we do when it comes to trading, all right? Gary, the designer of the program, said, let them just copy me, right? When I do a trade, they'll do a trade, right? We'll give you the trade copier, and that's gonna give you an opportunity, right, on a weekly basis. The average is between 2,200 and 2,800 pips, all right? You get this right for 1 week, even trading for $1 a pip, you're gonna trade for pay for the whole program. So here's what I need you to do. For everybody that's typed in your phone number, all right, or you're about to, here's what I need you to do. Some of you have already said you wanna do a payment plan, okay? Some of you, I'm sure, are gonna be okay just doing this as a quick one-time payment, you get it out of the way, all right? If you're leaning towards doing this as a one-time payment, all right, you want to take advantage of that discount, right? Here's what I want you to do. Just type the letter A in the chat box next to your name, okay? Because when we talk, here's what's going to happen, all right? By typing letter A, you're not locking yourself in. Again, all right? We're going to help you. We're going to show you the warranty. We're going to make sure you know what this is all about. We're going to dot every I, cross every T. But if you look at that and say, okay, I'm in a position to be able to take care of this with a one-time payment, well, type the letter A and that lets me know. You're in a position to do that. Should you do it, I'll give you your charts for a year. I'll make it worth your while, okay? So on the other hand, the rest of you, right, what you're gonna be doing is a payment plan. Just put the letter B next to your name, okay? You got 249 bucks. I'll get this right on your desk, all right? And then we'll stretch the rest of it out with a payment plan that makes you comfortable. If you're not comfortable, I do not want you doing this, okay? But we'll find something that fits your budget, all right, for the balance of the thing. And either way you do this, gang, you've got 60 days, all right? Before you have to make any kind of a final decision, you've got 60 days, all right, to review this entire thing. Test drive it. We want you to use it, all right? We don't want you just using it for 10 days, right? We want you to make a good decision. We're gonna let you use it for 60 days, all right? And then, right, after you've got results, that's when you're gonna tell us one way or the other if you're keeping it or not, all right? I mean, if it works, of course you're gonna keep it. Okay, that's what you came here for. That's what you're trying it for, okay? But if you decide after 60 days, for whatever reason, no matter how well it works, all right, if you just say, you know what, nice, not for me, our warranty says we'll refund every penny that you paid just for trying it, okay? We're the only company that does this. Fact of the matter is, gang, we do it so that you have every chance, right, to make a good decision on this. So Brian and Sean and Terrell, I've got you as option B. Patel, you're in option A, right? Let's see, good. Joyce, you're in option B. A lot of B's coming in, that's fine, right? Wow, look at that. All right, Stephen and Aaron, great. I got you as option B's, right? Javier's an A. Michael, James, Phil, trader number 7, right? You're a B. All right, good. All right, look it. I'm glad. Because it makes sense. What I showed you today is massive. All right, this is why you come to webinars like this. You've got something new, you got something fresh, you got something that's different than you've seen before. ABCD, it works in the Forex. Get the tool, try it out, use target trading. We know it works, all right? If it works half as good, right, for you as it's been working, you're gonna kill it, okay? Just let me know which way you're thinking, option A or option B, all right? Then write down this date, all right? On the 12th, we're gonna do a full day together. Friday, we're gonna trade live, but on the 12th, we're gonna do a full day together, okay? This is one you can bring your spouse to. You're gonna log in. This is one you can bring your friend or your neighbor or your kids to, all right? If you can't make it, we'll record it. You're gonna get the information, but that's the day we show you all 3 trading systems, okay, that are built into target trading. That's a huge day that's coming up, all right? Your timing on this is ridiculous. Bank of England is gonna do their thing, right? You saw what the ECB did today, how it moved the euro, right? Bank of Japan's gonna do their thing. Then it's up to the Fed. I mean, your timing is right there, gang. You get in one of these 10 spaces, it's gonna be huge. And I'll tell you what, they're telling me I gotta wrap it up, okay? And I don't want you to miss out. All right, because I probably got 20 names right now and I only got 10 spots. So if you want to grab one of these spots, okay, you want to guarantee that you get one of the spots. I don't want you to be disappointed when we call and you say, oh, is there any spots left, and we're out of them. All right, if you've got to get one of these spots, and there's some of you that want to, right, then don't wait for us to call. Call the number that's on the screen. I'll guarantee you a spot. All right, if you're one of the 5 people that calls me first, all right, I will guarantee you a seat. I'll sort of let you jump to the front of the line, okay? And I'll make it worth your while, right? If you call me, you're gonna save me some time. So I'll save you some money. Time is money. I'll save you $200, okay? So write down that number. You wanna call me. Now what are we talking about? $17.97. It's like we're giving it away, right? 249 bucks, right? To get the whole thing on your desk with a 60-day warranty. This to me is like the no-brainer of the century. Okay, because you can't get anything for $249 that's worth what I'm showing you. Okay, you couldn't go to a cooking class at the local college for $249, right? What are you gonna do, burn the hamburger? Listen, all right, you put $249 down, I'll get you going, and I'll give you 60 days to evaluate it. The worst thing that happens is it doesn't work the way you thought. I'll give you your $249 back, okay? That's what it says on the warranty. Well, I want to see the warranty. Well, let that be the first question you ask when you call, okay? Because I'll show you the whole thing. That's how confident I am that this thing works, okay? And the last thing I'm going to tell you is this. All right, good. Charles, you're calling me. I got 4 of those left. Who else is calling me? Robert, you said you're calling me. I'm going to save you $200, Robert. All right, somebody just said put the phone number up again. Well, here's what I'm going to do. For those of you that are calling me, great. For those of you that put your name in, great. If you didn't, right, I'm going to make sure that you do anyway. What do you mean? Well, there's something that's keeping you. It ain't my enthusiasm, and it ain't the fact that what I showed you doesn't work, because I showed you that it worked 15, 20 times, different currencies, different time frames. It's awesome. Okay, so the only thing I can think of is that you don't want to do this because maybe it's a money thing, right? You know what, Joe, you're right. $2,000, everybody's asking me for something. Well, I'll tell you what, if money is the only thing that's keeping you, I'm talking to you right now, because I'll tell you what, all right, I'm going to make this so that you have to do it, because I can take care of the money part. Well, what do you mean? Well, what if I can get this for you for less? What if I can get this for you for less than I showed you? Well, how much less are we talking about? Well, what if it was free? I mean, if it was free, would that get you off the fence? Would you at least give it a shot? Because I'll tell you what, for the first 5 of you, all right, that type in the word free, I've got not 1, not 2, but 3 ways you can get it for free. Okay, I've got a scholarship program, I got a tuition reimbursement program, I got a referral program. All right, so don't tell me that money's getting in the way, because I just kind of took your excuse away on that. All right, there's always a way to do something if you want it bad enough, right? Oh, a minute ago it was $2,000, now it's free. Well, there's a couple of steps you're going to take to get it for free, but I'll tell you what, right? There's an opportunity to do that, okay? Bona fide. So if you put your phone number in and put the word free, that's the conversation that we will have.